So Bitcoin saw a very sharp drop this week after news of Iran's attack on Israel, and is down about 6% in the last 5 days. And that's sort of run counter to the narrative that it's a safe haven trade, sort of like gold. And gold has actually been flat this week. It went up and then was flat, but it's doing better than Bitcoin in the most recent few days. Tell us what's going on here, because the digital gold is not really acting like the real gold.
I think it's acting better than the real gold, which all the gold bugs will be like, what are you talking about? But Bitcoin is gold with wings. So when gold goes up, Bitcoin goes up more. When gold goes down, then Bitcoin goes down more. So earlier this week, Bitcoin went up and then it dropped when there was kind of all the conflict. And so gold also went up. It just didn't go up as much as Bitcoin did. And then when they dropped, gold basically dropped back down to being flat for the week, and Bitcoin dropped to being down 6%. If you want a store of value that does not go down a lot, you have to be okay with a store of value that does not go up a lot in dollar terms too. So if you look at the performance, let's say, of this year, Bitcoin and gold have actually traded directionally very similarly. But Bitcoin is destroying gold's performance in terms of year-to-date return. And so I want a store of value that over the long run goes up, but doesn't just go up at about the pace of inflation. I want a store of value that gains me purchasing power. And so it's not true anymore. But earlier this year, if you look back over 5 years, gold holders had actually lost purchasing power, because the rate of inflation, where we had been in a high inflation environment, had been higher than the rate of gain for gold. Now, gold, because of the recent run and the new all-time highs, has recaptured that, and it has now outlasted inflation. But the fact that it's even close, whereas Bitcoin is not close, tells you everything you need to know, which the digital gold is superior on a return basis than the physical gold. So
does this mean that you do view Bitcoin as a safe haven trade? Can you clarify that?
I think that it's not my opinion. It's objectively a safe haven trade, because what we have seen is people convert fiat currency into Bitcoin and they hold the Bitcoin. That is, you look on chain, they're holding the Bitcoin long term. If you look at what occurs when inflation was coming, Paul Tudor Jones, Stanley Druckenmiller, all of them, hey, this is an inflation hedge. I think it's going to be the fastest horse. If you look at in times where there is conflict, what you have seen, let's say when former President Donald Trump was shot in the assassination attempt, gold dropped. As soon as he was okay, it exploded higher. And so what you're seeing is a highly sensitive asset to these macro developments, but it is still a safe haven asset. And so what people tend to look at is they will say, okay, Bitcoin is this non-correlated asset. It's asymmetric, and it does serve as a safe haven. But then in moments of crisis, people will look and they'll say, oh, look, it went down. It's not a safe haven. If you go back to the 2008, 2009 global financial crisis, gold went down for 6 months. For 6 months, gold's price fell. That doesn't mean it's not a safe haven. It means there was a liquidity crisis. Any asset that had a liquid market attached to it, you sold. And so gold went down, stocks went down, real estate went down, bonds went, everything went down. And so if you go to 2020 in March, when there was a liquidity crisis, all of a sudden, the Federal Reserve's got to cut interest rates twice. They got to print money to kind of solve that liquidity crisis. Well, in a liquidity crisis, everyone's selling everything. So gold went down, stocks went down, Bitcoin went down, everything, because people want dollars. And so correlations trend towards one in moments of crisis, but that doesn't mean that something is a safe haven or not a safe haven. What you have to look at is, what are investors doing over the coming months? Because in a moment of fear, what people actually want is not a safe haven asset. What they want is they want as high liquidity in US dollars as possible. Then what they do is, okay, the crisis has transpired. What am I going to position myself to benefit moving forward? And that's where they start to allocate to safe haven assets. And when you do that analysis, Bitcoin has been a huge winner over the last 10 years.
I think that makes sense. Can you explain a bit more also, if a critic of Bitcoin were to say, this is more correlated to risk assets in the stock market than to, maybe dollar, but safer assets like gold, what would you say to that?
It depends on what the time period is. So before 2020, if you looked at correlations, Bitcoin's correlation was about 0.15. It was very non-correlated compared to stocks or, other assets. This correlation has crept up. You should expect it to creep up because what do you have? You have more and more pools of capital coming in and adopting the asset. And so how do you get a correlation? Everyone acts the same with the asset. And so if everyone on Wall Street owns Bitcoin and everyone buys or sells on the same inputs, then of course it's going to become correlated. But we're still not to the high degree of correlation that maybe some of the more traditional assets are. So it may not be as non-correlated as it used to be, but it is still less correlated than many traditional assets. And so 10 years from now, Bitcoin probably has a higher correlation than it does today because it's going to be adopted by more and more people. Same thing with like the financial return. Buying Bitcoin in 2015 was highly risky. The odds of it going to zero in people's minds was way higher than it is today. Because you took more risk and the perception of risk, you should get paid a higher return. So in 2015, you expect to get paid way more in the returns of Bitcoin than you would today. Why? It's less risky. So same thing with correlation is you should be rewarded with a higher non-correlation in 2015 than today because it's less risky, there's more adoption, and the asset is now starting to seep into portfolios where people are making decisions based on the same inputs. And so everyone starts to act the same way. What are they doing right now? Risk on, risk off. I'm buying tech stocks. I'm not buying tech stocks. I'm buying Bitcoin. I'm not buying Bitcoin. And so you're starting to see some of those correlations, but I still don't think it's at a concerning level that would make me want to either sell my Bitcoin or think that the thesis for adoption and investment has changed.
Okay, so speaking of these correlations, and we stressed on September, Bitcoin and stocks had a winning September, which is quite rare historically.
Narrative violation.
Yeah, so that's what I want to ask you about. Why do you see this as a narrative violation? Is there anything that you're pointing to other than historically that doesn't happen?
Just September, stocks go down. I think it's the worst performing month of the year historically for stocks, if I remember correctly. Bitcoin also has a pretty bad month. People kind of come back from the summer break. They start tactically, changing their portfolio, preparing for the end of the year. You get things like rate cuts. You get things like elections. And so September's just kind of been a dead month. Well, once everyone starts talking about it being a dead month and everyone expects it to be a down month, of course it rips up and it has a great, month. Now, what's funny to me is if September's supposed to be a bad month, October is also known as Uptober, right? And so everyone's expecting the prices to go up. How funny would it be if stocks and Bitcoin trade down or trade up when they're supposed to trade down, and then when everyone thinks they're going to go up, they trade down? I'm not saying that's what's going to happen, but it goes back to this idea that everyone is so sure that they know what is going to happen based on historical data. You can use it as a guide, but it is not written in stone. And so you have to be able to evaluate the historical data with the current situation, easing monetary policy, an upcoming election, geopolitical risk, all this stuff, and try to come up with what is the probability. Now, the one group that doesn't have to worry about is September up or down or October's up or down are long-term holders. And so in the stock market, if you're just dollar cost averaging into these indexes and you just hold the asset for a long time, you're going to be fine. Same thing with Bitcoin. And so I do think that there's this weird thing where everyone is doing like an intellectual kind of like, like circular conversation. Is it going to go up? Is it going to go down? Is it going to go up? Is it going to go down? Who cares? Like in 5 years, it's going to be worth more or less. If you are trying to trade highly volatile assets, I don't know what Bitcoin's volatility is right now, but it's like an 80 vol asset at times. If you're trying to trade that, you are a masochist because the odds that you can be able to go long and short an 80 vol asset at the right time over and over and over again, you either are God, you have a crystal ball, or you're a liar. But those are the only three ways that you can actually come to the conclusion that you're going to be able to time tops and bottoms in an asset like that. And so the average person is much better off just dollar cost averaging and do a good asset and hold it for a long period of time.
Pretty much every investor and portfolio manager I've been talking to, they've been disregarding the Uptober or down September, and they don't even want to talk about it with me. But, as a reporter, I'm going to ask these questions. But the long-term thinkers are not worried about this. They're not even looking at it. On that note, thank you for having me.
I appreciate you coming. We'll do it again.